Hey all, welcome to ShareTreck. This is Raj here, friends. Last week I teased some Indian shares for you, and some of you said, yeah, you guys are interested. So this is the second installment of that, and I'll try to do every week and if there is more uptake, then I can do more videos on that because I am investing there as well. Today's company is ICICI Bank, which is one of the biggest banks in India, and it also has got an ADR out here. So both you could directly invest in India, or if you don't have the ability to do that, you could invest it in the US as well. So ICICI Bank seems to be a good opportunity to talk about, and this bank is doing pretty well overall. It has got a large number of branches, and they just came out with their quarterly earnings report, and things are looking overall good, except that their margin has gone down a little bit, but this share has got a lot of strength behind it. So that's what I'm going to talk about. Let me give you a brief history of this bank, and before that I would like to put the disclaimer out there so that we do not run afoul of any regulatory issues. So let's meet after the disclaimer. Welcome back, friends. So ICICI Bank, I remember many decades ago when I was doing my MBA. At that time, this institution was called Industrial Credit and Investment Bank of India. So that's how ICICI came in. And the focus of that bank was mostly on industrial credit and a little bit of credit rating. So it was a few headquarters and few branches, that kind of a setup. And somewhere down the line, they got converted into a retail bank. And they also have a brokerage side where they have online trading platform for buying and selling shares and equities. They have insurance arm called as ICI Prudential. So there's a whole lot of various lines of business that they have. A pretty good company overall, and over the decades they have had ups and downs. They had a managing director called Chanda Kochar who got arrested, and there was some industrialist who was also arrested because of a loan that was not properly handled, and which resulted in non-performing assets worth around 1,400 crores. Crores is the term that is used in India to describe numbers. And I would say a crore would be probably 100 million. Don't hold me to it. You can always Google and see how many millions make a crore, or how many billions make a crore. You will find that out. A crore is spelled as CRORES. So that's a huge amount of money by Indian standards, and it was quite serious, but still the stock value did not suffer. The stock continued galloping across. I personally do have trading accounts with them for stock trading. It's a very good interface. And in terms of banking, Indian fintech is way ahead of most jurisdictions. Especially I see a huge contrast with Canada. For example, in Canada, if I get a check and I put it into my branch, the check may have come from another bank just across the street, but it takes 5 days for Canada to clear that check. Whereas in the Indian banks, if you take a check issued from somebody in Kashmir, which is on the north end, and put it in Cochin in a bank, in a different bank, which is in the south end of India, it will still clear in 2 days at the most. And they also have online transfer, just like we have Internet in Canada. The banking system is pretty good, and banking penetration is also good. Mobile banking is also available. So by all standards, it is pretty good investment. The areas where Indian banks generally lack is with regard to privacy and how they handle information, and information security is another area where I don't have much of an idea of how secure their data is. So those are the two areas which I consider as risk areas for Indian banks. But otherwise, the population is huge, 1.4 billion people. And the current Prime Minister Modi has ensured that everybody has a bank account. There is a national identification number for the citizen as well as for a taxpayer. So together, it forms a foolproof system of getting all the gray and black economy into the white. And therefore, banking is going to have a much bigger footprint going forward, because the economy size has multiplied by bringing in the unorganized sector and the black market, and expanding the organized sector and the white economy. So that's the background for ICICI Bank. And I'm going to go to the price chart and show you how it has performed and give you some tips. Well, friends, here I have the chart for ICICI Bank. And each of these candles is a 1 week candle. I have done that so that you could get a comprehensive view, and later on we'll look at various time frames as well. I'm just going to move around a little bit so that the chart can be calibrated. Now, what I would like to point out to you is the steep bull channel on which it has been all the way from September 2020 onwards and right up to now. It's a one-way march. So if anybody had invested in September or let us say September or May 2020, then they would have gained, let me go from this bottom all the way to where we are right now, they would have gained 319%. This is the kind of money we are talking about. And even if I look at just a period, let us say from 2022, so this is where we are on 2021, and if I go all the way to right now, from 2021, there has been a gain of 74.71% on this share. And friends, if you look at the history out here, you will see that there was a split of 5-1 in December 2014, and then again another split of 11-10 on 20th of June 2017, and still the share has been going up and away. So you can imagine the person who had invested for long term, starting, let us say, even somewhere around 2009. Let me take a widget and measure from 2009 all the way to where we are right now. And let me take the widget again, and let us say we start from 2009 and go right up to now. It's a gain of 2,281%. Now, I haven't seen these kind of numbers in very often. So this is amazing, and many Indian stocks perform like that. Now, the question is, you will say, Raj, what is it that I should think of, because this is too good to be true? I would say, yeah, it is too good to be true. It is true for all Indians who are living in India and who have earnings in Indian rupees, savings and spending in Indian rupees. But if you are an American or a Canadian and you are investing in India, you always have to look at the exchange rate, because you have exchange rate risk factor. So you have to keep that in mind. But even with the exchange rate risk, if you look at the rate at which ICICI Bank has grown, it is phenomenal. So some of you may ask, Raj, can you please elaborate on exchange risk? So let me put it this way. Let us say today the Canadian dollar fetches, if I want to buy a Canadian dollar using Indian rupees, let us say today I have to pay maybe 65 rupees, Indian rupees, to get a Canadian dollar. The exchange rate risk is that maybe 5 years down the line, I may have to pay 45 rupees to get a Canadian dollar. That is one way the exchange risk may manifest. The exchange opportunity may manifest if 5 years down the line, I have to pay only $25 to get a 25 rupees to get a Canadian dollar. So it could go both ways. That's why I call it the exchange risk, because we are more worried about losing money and we are happy to gain money. So I'm focusing more on the risk part. So there is always an exchange risk issue when it comes to emerging markets like India. But overall, it's a great bank, and it has a leadership position among the Indian banks, and it has got full service brokerage all around. It has covered all areas of wealth management, insurance, as well as retail banking and commercial banking. So it's a whole package. So friends, that was my introduction to you for ICICI Bank. Let me also show you the ADR symbol before I go. So here is my mini Indian ADR list. You will see IBN. IBN is the ticker symbol for ICICI Bank on the New York Stock Exchange. And you will see that it is similar to what we saw out there with the Indian stock market. It's continuously going upwards, and to a certain extent the exchange risk is reflected in the chart, because the chart is not as steep as you saw in the Indian stock exchange. That's because the exchange rate is getting adjusted and the valuation takes place. Now, let us do a little bit of analysis before we move. I'll go to the daily time frequency, and let us see if we can find any clues of what the likely trend is going to be. So I'm going to draw a trend line, and I have that here. So this is a bull channel on which we are traveling, and this bull channel is conical. This is what I think is the bull channel. It's running a bit parallel but kind of conical because it's going upwards. This one is slightly upward sloped, and we are moving within this, so it looks pretty healthy. Momentum is just about average. MACD is still bullish, so overall I think it's going to oscillate between these two unless something bad happens. In terms of the competitors, you have got HDFC Bank out here in the ADR section. Again, this is in the New York Stock Exchange. I'll talk about HDFC Bank separately on another day. They recently had earnings as well, and they outperformed both EPS as well as revenue. HDFC Bank has got a good pedigree, and it was one of the first private banks in India, and they did very well. They have good track record. We'll talk about them in a different video. Well friends, that brings me to an end of this segment on ICICI Bank, and next weekend I'll talk about some other good stocks in the Indian stock market that you can look at. With that, my friends, I'd like to bring this video to an end. Please let me know if you want more content like this, and I'll have it for you. Bye for now.